Hey trader, and welcome back to Elite Trader Academy. In this module, we're diving deep into the importance of trade journaling and how maintaining a detailed journal can be a game changer for your trading success. A trade journal is much more than just a simple log of your trades. It's your personal roadmap to growth and improvement. Every time you place a trade, whether it's a quick scalp or a long-term position, you have an opportunity to learn from the experience. By recording every trade, including your entry and exit points, position size, stop loss and take profit levels, and the eventual outcome, you capture a complete snapshot of your decision-making process. This record not only details the numbers, but also the reasons behind your choices, which is invaluable for analyzing your trading performance over time. When you review your trade history, you gain insights into what strategies work for you and what areas you need to improve on. Analyzing both your successes and your failures allows you to identify reoccurring patterns. For instance, you might notice that you often exit trades too early, or that you tend to set stop losses too tight during periods of high volatility. Over time, this feedback loop helps you refine your strategy and develop a deeper understanding of the market dynamics that affect your trades. Beyond the technical data, keeping a trade journal plays a crucial role in managing your emotions. Trading can be an emotional roller coaster, filled with moments of euphoria when trades go right and frustration or disappointment when they don't. By writing down your thoughts and emotions before, during, and after each trade, you gain a clear picture of your psychological patterns. This process helps you recognize the influence of fear, greed, and impulsiveness on your decisions. For example, if you notice a tendency to enter trades out of excitement or panic, you can take steps to mitigate these impulses and stick to your predetermined plan. In essence, the more self-aware you become, the more rational and disciplined your trading decisions will be. A trade journal also holds you accountable. When you see a detailed record of every trade, it becomes much easier to spot inconsistencies and mistakes that you might otherwise ignore. Without this accountability, it's all too easy to repeat the same errors time and time again, like wandering through a maze without a map, never learning which turn led you astray. By documenting your trades, you force yourself to face both your wins and your losses head on. Each loss becomes a powerful lesson, an opportunity to understand what went wrong and how to adjust your strategy. Instead of sweeping negative emotions under the rug, you analyze them and use that insight to improve your overall performance. Trade journaling isn't just about accountability, it also provides a wealth of information that can help you evaluate the effectiveness of your trading strategy. By studying your trade data, you can identify which setups are most profitable and which ones consistently led to your losses. This process of strategy refinement is essential for adapting to changing market conditions and continuously optimizing your trading performance. Over time, the insights you gain from your journal can become the cornerstone of your trading success. There are several ways to maintain a trade journal, and the method you choose will determine on your personal preference and the level of detail you want to capture. Some traders prefer the simplicity of a physical notebook, writing down each trade by hand. This method can be very personal and engaging, forcing you to reflect deeply on each decision. Others opt for digital solutions like spreadsheets in Google Sheets or Excel. With a spreadsheet, you can effectively organize trade data by tracking entry prices, stop losses, take profits, lot sizes, risk percentages, trade duration, and any notes on your performance. Then there are dedicated trade journaling platforms such as TradeZilla, which automate much of the process by importing your trade data directly, offering detailed performance metrics, visual stats, and even strategy optimization tools. I can tell you from experience that keeping a detailed journal was one of the biggest turning points in my trading journey. Once I started meticulously tracking every aspect of my trades, I began to see patterns that I had previously overlooked. I learned exactly where I was making mistakes and where I was succeeding. That newfound clarity allowed me to refine my approach and build a more disciplined, consistent trading strategy. Many traders shy away from journaling because they see it as an unnecessary hassle or painful reminder of their losses. But the truth is, neglecting to document your trades can seriously stall your progress. It guides you away from the wrong turns and helps you find the right path. No matter which method you choose, the key is consistency. The more detailed and structured your journaling process is, the easier it becomes to identify patterns, refine your strategy, and ultimately improve your overall trading performance. Every recorded trade is a building block in your journey toward becoming a better, more informed trader. That wraps up our lesson on trade journaling. Keep your journal updated, use it to learn from every trade, and let it serve as your personal roadmap for continuous growth. I'll see you in the next lesson.